Okay. So Brian, let's just look into the affordable housing. I know that you said
Mm.
that you're into the market segment of affordable housing. So for me and anyone who wants to get into the market, we just want to understand how does it work. How do you start because I see a whole lot of opportunities in this market, especially with the COVID pandemic challenges, people losing their jobs and people as well as looking to more affordable accommodation rather than the popular one of high income bracket and stuff. So how did you get into this whole market segment of affordable housing? How did it start for you?
So how it started for me was pretty, I mean, I've been in the property space for just under 10 years, having started in 2010. So I worked for Remax. That's how I got into real estate. I was actually headhunted by a lady that owned a Remax franchise when I was waitering in Durbanville. So they offered me, you could call it a bit of a bursary because they pretty much said, you're passion driven and let's maybe try out selling property. So first and foremost, I never ever even as much as had property as my desired career path for my life. I actually wanted to do something along the lines of maybe medicine. I mean, my dad is a town planner like you, so I guess I was close. I was closer to town planning, medicine, engineering than I was to property. But then when I actually joined Remax, our offices were in Kloof Street, which is Cape Town CBD, and we serviced your high-end properties in the Camps Bay and right. So I sort of remained with him for about 3 years till 2013. And the reason why I actually got to a point where I felt like I was doing an injustice to myself as well as my immediate circle was I just realized how far-fetched that those properties were, one, how far-fetched the possibility of a potential buyer or seller being a family friend or someone I know, because I knew my background and I knew there's no one who's really going to sit down and talk to me about potentially buying a 200 million worth of house in Camps Bay or Clifton. So now at that point, I guess my question to myself was, surely there has to be a different market segment where I get to interact with more people of color, more black people, where I get to see more black people actively coming to the party in terms of buying property and then when I left Remax, I joined a company that was in Parklands, and they specialized in distressed sales. I worked with them for about 6 months while living in Parklands. And now with distressed sales, that again opened my eyes to a different market segment because funny enough, when I got into distressed sales, I was now dealing with more people of color who had made the wrong financial decisions. So now you could say I had reverse engineered seeing what the troubles were for people of color when it comes to property. In my first stage entering into the market was realizing that affordability is clearly a big issue for Black people. Therefore, there should be other areas where they can thrive. And then secondly, when I started dealing with them, I also then realized that, oh, okay, so the Black people that do have or that did have some form of financial capital to buy properties didn't really have a person who held their hand or gave them the right advice in order for them to not burn their fingers along the way. Now they find themselves having situations where banks are about to repossess their property. And I was obviously now trying to give them solutions whereby they don't necessarily lose their home and have nowhere to stay, or where they could somewhat, control the debt that they have and make a means to pay it off and my conclusion with everything that I'd encountered up until 2013 was that people need money, but they equally need to have the right information when it comes to making a real estate decision, which is where it's then changed my whole pattern around, it's when you deal with a real estate agent, don't deal with someone who's just trying to get a sale over the line. Deal with someone whose interests are strongly vested in you making the right decision that you will still be happy about 5-10 years down the line. It's no use buying something now and then in 5 years time you realize, oh my goodness, I bought something that was either overpriced, or I bought in an area where a friend of a friend said this area is going to be double in value, and you didn't even do any research, and so that's when I then joined a property company that focused mainly on giving people advice. I think I can say our primary goal was giving the right education, tips, and advice to wannabe property owners, and also essentially identifying these properties for them, which is what then now brought me into the affordable housing market, because I now wanted to strongly deal in an area where it's easy for any regular Brian on the street to look into buying into those areas. So now, if the minute people hear cheap or affordable, the first thing they think is there's a problem there. And now it was also about educating people to say, no, there's not a cheap property or an affordable property is not. Okay. Yeah, so it was just to pick up where I was, it was really now about trying to bring the right message across that an affordable property does not always have a problem. And if there's a problem, there are ways to minimize the impact of that problem. You could, one, either minimize the impact of the problem, or two, you could use the fact that there's a problem present to get a good price for that property. And yeah, that's how it really got me into that state. And it was obviously now just trying to educate people as much as possible. The areas where prices are low and opportunities are solidly thriving, where obviously places like Joburg Central, Pretoria Central, places that border universities because of student accommodation, and because the one perception that as an investment sort of thought leader in a way that I was trying to bring across was the fact that there's this wrong mindset that your first property that you buy has to be the property you live in. It doesn't necessarily have to be like that. Mm-hmm. So with a number of people, they want the first property to be, you know, in fancy areas where the prices are high, and but you can really continue renting out wherever it is that you stay and make the most of opportunities in the township areas, or make the most of opportunities in Joburg Central, Pretoria Central. Why? Because such areas where your prices are low, your rental income is actually much higher. So basically the idea of where you should be thinking as someone that wants to break into the investment market, before you think of a property to live in, or before you think of spending money at too early a stage in your life, rather think, how can I make money from property? Once you ask your question, how do I generate an additional income from property, it changes the way that you're now asking the right question, because it all really is about asking the right question. How do I generate an income from property? Great. Let's look into properties that you could either buy, maybe renovate, and then resell, and get someone who's educated or informed enough to really show you what amounts of money you stand to make by doing that. You could either buy to rent out. If you're buying in the township area, you could extend the house, build a cottage at the back to put more tenants in, and now to fund that project, because you're not making a lot of money, you probably don't qualify for millions and millions to buy some fancy place in the southern suburbs or in the winelands and so forth, but you're making enough money for the banks to give you to buy maybe even 2 properties in the townships or in wherever. So now you get to a point where you're actually using the bank's money to you generating an income, because whatever rental, you're maximizing on the potential of that property, and obviously making a higher rental of the property that covers all your costs and maybe even as much as puts money back into your pocket. That's really the position where you're trying to be. Tina, with black tax and all that we have, I'm sure additional income stream would be an attractive conversation to absolutely anyone. And through property, one can do that. So once you now get yourself to a point where you're making an additional income, it means even when you go back to the banks, they will now even as much as give you more money than they would if you're just basing it on your one salary that you get at whatever job that it is that you do. So this is really the whole point of this exercise, and the whole point of looking at property this way is for us to get to a point where we generate wealth through property so as to improve our lifestyles and essentially get to the point where we buy a property that we've dreamt of to live in. So it's really about having access to the right information, having someone who can at least sit down to help you map out the right strategy for what it is that you're trying to do. Because there are a number of things you could do in property. There are a number of strategies that you could use to get to wherever you want to get to. But trying to copy and paste what's working for others is definitely not the way for us to get to a point where we're making money from property.
Wow. You've said quite a number of important aspects in relation to getting to the market for property. I mean, one of the things that I took out of your now the information that you provided is the fact that when you the thing that we know when you enter into property is that you must first buy your own property to first own, and then later you build up into that. But you don't understand the consequences of that, because remember, when banks look at funding you, you know, that financial support to buy the property, they look at the affordability. So if you first buy your own property of, let's say, 1.9 million, you've already somehow reached or in a 50% of reaching the affordability gap that the bank can actually afford you to provide, even to provide that home loan for you. And also the access of information, because information for Black people is difficult. I mean, I'm privileged to information because I work in the sector of development. So I know these things, but somebody that is just a lame person, you know, how will they get access to the information? How do you know this is the right property to buy in the right location? You know, how do you know that, you know, in terms of affordability, you know, how does bank assess that application? So it's a good thing that you guys are doing as well, setting up people, mapping up those strategies and stuff. So now, and then now, so in terms of then the requirement, for people if they want to utilize your services and you guys assisting, what are the requirements that you guys look into when you receive a client that say, you know what, I'm ready now to invest. Help me, guys. So what are the basic things that you guys you first look into before you can even decide to assist someone once you get into property?
I would say definitely it's just one of the big things that I look into is just the interest, just the enthusiasm. You definitely need to have the drive. Again, Tina Zodaki, I think one thing we've always feared, I think it just goes back to sort of generational cycles where if you ask too much, you are either reprimanded by your mom or dad, or, you know, so we've got this culture where we fear to ask questions. And so what I mean by enthusiasm, the people that are willing to ask questions and learn, that's definitely the key to unlocking a number of opportunities. Then in terms of money is not necessarily even a requirement. I wouldn't say it's a requirement. There's a way that you could make money without having money from property, you know? It's just around what strategies that you use. You've probably heard of people that flip properties. I've done a few flips myself where you literally are buying a property for a certain amount of money that you know you don't have, but then you go over and you do a back-to-back with someone. So in other words, you tell me, listen, Brian, I'm selling a cell phone for 10 Rand, right? And I don't have 10 Rand, but I know a friend whom is probably willing to pay more for that cell phone. Now, I just simply say, okay, based on the relationship that I have with you or whatever contractual agreement you're willing to enter with me for me to buy your phone. I said, give me a week to pay you 10 rand. Yeah, connect. And I go to my guy and I say, listen, I found you that phone that you wanted, and you can have it for 15 rand, but take it or leave it. You need to pay now because I've got other people that are interested. What have I done there? I've used my situation to actually I'm now 5 rand richer than I was beforehand, simply because I just connected the dots. And that's how a number of property investors within the property sector have started from a point of not having money whatsoever to a point where they're now owning properties because they did a number of those transactions, and their profit margins they were saving up or putting into certain accounts that are interest bearing, and they made enough to now go maybe buy a property in partnership with someone else or outright buy by themselves. So it's really, yeah, basically what I'm highlighting is money is not a requirement to be a property investor. It's really just the enthusiasm, because even if you don't have money, there are ways of you generating money in the property space. Like I mentioned as well, that how I started in my journey was helping other people sell their properties, other people buy and sell, and obviously earning a commission from that. But fast forward to today, now I moved up a certain ladder to be able to buy properties, renovate, and then resell. So basically, it's just really about understanding what do you wish you could do within property, and what do you feel are your limiting factors or limiting scenarios, and then I have a dialogue with those people and say, okay, now let's look at what gaps the property market presents where you could start generating some form of an income. Perhaps you don't necessarily have to buy property, you don't necessarily have to be a registered agent to sell property in order to make money out of property. There are other services required. You could maybe just offer people property inspection services. We've been seeing a growth in the number of property inspection companies that are in South Africa at the moment. And that, again, is a good entry point for us as Black people and as the youth. I guess I could also add that as the youth, seeing as it's Youth Month, to create opportunities by ourselves. It's really about opening up your eyes and realizing that we've been limiting ourselves to looking at things just in one sort of dimension, whereas we could just try and look at it from a different point of view. There's no use trying to say, I'm unemployed, but my goal is to buy a property. I mean, where's the money going to come from? It's not going to come immediately, but surely there has to be something that you can still do now in the short term in the property space that can at least now make you get a step closer to what your ultimate goal is. So yeah, the requirement, back to your question, it's really just enthusiasm. It's just realizing that you could turn your limiting factors into opportunities.
Oh wow, that's interesting. Then it's quite. It sounded very easy to enter into. Because again, I mean, for me as well, is that I need to have somebody that's going to hold my hand and say, okay, you know what,
Yeah,
I've spotted a property here, and this is how much you can make, and we can assist you to get the tenant. And at the end of the day, this is your the growth of your investment. Simple as that. Other than for me now, you go and look into this place, you don't even know what to look into, and find yourself that you go into a wrong deal, and you
yeah,
regret even the point of you entered into that deal. So
yeah.
how do you spot Kengoku there? Because I know you talk about you go guys to if you're more of your affordable housing is in Joburg. Yeah, that's
Mhm.
correct. Yeah. So
Yeah,
Kengoku,
that's correct.
how then do you know this is the right unit to buy in the right
Mhm.
location? And if you buy it, this is going to be a property that's going to yield profits for you.
Yeah, yeah. So definitely, when you start looking into affordable housing areas, I'd say a good starting point before, and this is just my advice, before you look at buying freestanding houses, rather start with sectional title. Reason being, with sectional title, there are a number of advantages, right? So the first and foremost, you want to know that whatever section, and by sectional title, let me use layman's terms, I mean a block of flats.
Mm.
It's better to buy a block of flats than buy a freestanding house because of security benefits and also because you're trying to rent out. Now, when you go into your Joburg Central, Pretoria Central, or any other place really where you feel the price point is sort of okay for you to pay, just make sure that the building is well managed by a reputable agency, that the building is insured. They need to have an insurance certificate. Ask whoever is helping you, and by helping you, I mean probably the real estate agent that you're working through or dealing with. Ask them to show you a past sales report of sales in that particular building, because normally if no one has been able to sell a property in a particular block, that could be a red flag. It means they're either struggling to either get the price that they want, meaning there was a price problem, meaning properties are probably overpriced, and. But one thing, again, by requesting a sales report that you will be able to get, which will give you a great indication of, okay, two things that you'll get from a sales report is seeing what the going trend in prices has been. Because at least in apartments, when basically the selling price of a certain property in one apartment affects what price the other flats in the building go for. So one can't really price themselves out of a market when you're in a flat. So even as a starter investor, if you see that nothing in this building has sold for over 200,000, and meanwhile you had found this great deal for 250,000, already just by seeing that sales report, you can already see that, I almost overspent by 50 grand. So at least that's what you get to pick up. You get to pick up what the trend in prices was. Around pricing, you can sort of see what the trend is for the as the price going rate. You can also see if any banks have been giving mortgages in that building. If everything has been purchased through cash, it could be because banks are not financing in that building. If banks are not financing in a particular building, again, it means something's wrong. Now, if you see that, okay, banks haven't financed in here or no sales have taken place in the last 5 years, now you can actually ask whosoever is helping you to say, but why is it that banks haven't bonded anything in the last 5 years? Or why is it that no sale has gone through in the last 5 years? And if whoever you're dealing with cannot tell you a straight answer and maybe they're not knowledgeable themselves, then yeah, it's much better that you either move away from it completely or you dig deep until you get to the root of those happenings. So because when banks give finance, they don't just give it based on your credibility as an applicant. So it's not just to say your credit profile is great and you want to buy into Brian Heights and then they just dish away 500,000. No, they do their due diligence because it is their money at the end of the day that they stand to risk. So they do their risk assessment by actually going into these various properties that you're looking to buy into. And now you could sort of just ride on the bank's wave, because if they've safeguarded and looked into everything and given it an okay at a certain price, then surely you can say, okay, now if FNB and Standard Bank as well as ABSA are confident enough to give finance of X amount into this block, then surely it's a decent building that's being well managed. So you could use just those things to just pick up whether, a building is either a go-to or a no-go. Yeah.
So, Brian, that information, do you get it from the agent, or do you guys assist someone to get that information?
Well, you get it from the agent, but we can assist as well. I mean, anyone, if they ever want a second pair of eyes from someone who stands, it's always good, I guess, to get a third opinion from someone who doesn't really stand to gain from the transaction at all. Because the real estate agent, especially given our South African economic climate, and so we've got more agents than properties for sale in South Africa. So it's obviously a rat race with many agents trying to make a living. And yes, some of them, although we do under our estate agency affairs board, there is a code of ethics that we need to adhere to in terms of being truthful, being forthcoming, being this. But let's face it, human beings are just human beings. So if you rely too much on the agent that you're actually buying from, they could mislead you into believing certain things that are not the case,
Yeah.
purely because they just want to get the sale over the line. Whereas if you then go out to a third party to give you an opinion on that matter as well, then you at least get to look at whatever deal you're sitting with from a different angle. So from our side, how my business model works is, aside from just selling a property to one of our investors, we also help them manage the rental of that property. So it's very difficult for us to mislead any of our clients into believing things that are not true, because we have to prove the concept once they take ownership. If I said your potential rental, if I said you could easily make 7,000 Rand per month from this flat, and then once they've taken ownership, it turns out that we're battling to even make six, then, I now stand accountable because I was the one who sold the property. I'm the one who's trying to manage the rental. So it makes it easier, I guess, for them to trust our services, because they know that I'm going to be involved, across the entire journey. Anyone who I screw over will obviously not buy another property through me, because the benefits of working in the affordable housing market is, unlike your Camps Bay properties, you will be my client perhaps each and every single month going forward. So I'm going to do everything to ensure that our relationship is obviously above board, and I'm doing everything that I want to do. Why? Because it's easier to scale up a property portfolio of affordable properties than it is to scale a portfolio of properties in Parklands or Plumstead. And unless maybe you have a trust fund and you are I don't know, related to a government official, then perhaps you could buy multiple properties in that market. But the majority of us cannot, and hence affordable housing market is really where we could make something out of our lives.
Mm. Oh wow. I think also as well, one of the things, the most important aspect as well when you look into affordable housing, should be safety in that area, and also the location, how close it is
Yeah.
to the public to the public transport. So
Yeah. And
Brian,
if you're looking to buy to rent out, definitely I would say the mistake a number of investors make is thinking like a landlord, thinking like themselves when they're looking into a different area. You need to reverse that psychology and actually think like your potential tenants. If you are I'll use you for example. If you live in Parklands, you obviously maybe drive to work but when you're looking into an area that you're looking to buy to invest in, think of your tenants that uh, think like your tenant who doesn't have a car, who obviously is trying to get to work on time, and now if you're if you buy a property in a dangerous area that's far away from public transport, it means you probably will not appeal to the female demographic. Why? Because they fear for their security, and by already excluding that demographic as your potential rental pool, you're now limiting yourself to a smaller rental pool, and you're heightening chances of you sitting with a property with no tenants for quite some time. Why? Because you're struggling to find people that will actually think that's a decent location. That's one. If you're far away from transport networks, again, you're really excluding both male and female, because people want to get to work and. So location is definitely something you should look into, even when you consider the affordable housing market. Proximity to schools, shops, hospitals, as well, is something that you definitely need to look into. Why? Not only because these sort of help, in terms of price appreciation in certain areas, but the main point that you should be concerned about is ensuring occupation of your property almost throughout your ownership. Why? Because you don't get to a point where an investment property is actually costing you money. Remember, the primary goal of this whole exercise was for that property to make you money so that you have an additional income stream, because we're trying to get to where we dream to be. So you need to take all those things into consideration, definitely.
Brian, do you think, with what approach do you think it best work with this market segment of affordable housing? Buy to hold, or buy, renovate, and to sell? I mean, looking also at how it has created wealth, looking at how he has created wealth for you. What is advice that you think you can, give to people?
So definitely all will work. It just depends. I mean, if a great deal presents itself, basically you should for a buy to flip, look at how much you stand to make. Is it worth jumping into? I mean, don't buy to flip. Don't buy a property for 200,000 to only flip and make 10,000 rand. You might as well not really go through all of that, because there are other costs involved, like your transfer fees with the attorneys, which you need to take into account, etc., etc. So I would say there's no better approach. All of them certainly work. It'll really just depend on the deal that presents itself. Look at which of those three would best fit into it. I would say, I mean, I've actually done more by back-to-back flips than I've done by Reno and flip, simply because the goal for me has been at least to try keep the flow of money my direction and not vice versa. So it's deals where it's opportunities where I certainly don't use too much of the little that I have. Instead, I'll rather capitalize and make whatever I can from whatever it is. So if you can buy a property and find a buyer who's willing to buy it in its exact condition, and yet you've still built a good enough profit margin for yourself, then do so, because you rather make an income than spend the little you have before you make an income. Why? Because we all know how life is. We still need to live life, even though we're trying to pursue these property dreams. We still have, maybe other dependents who are looking towards our school fees, you name it. So don't put yourself in situations where you spend money too soon. I think that's a very important principle. Time yourself, do what you can. And like I said, there are many ways to kill the cat, like the English will say.
Oh, okay.
Yeah.
Oh, okay. And what are best areas in Joburg? Like you talk about CBD. Do you think it's buying in Hillbrow because it's a CBD? Do you think buying?
Yeah. No, so I've worked in, so I cover Berea, Hillbrow, Yeoville, Braamfontein, Joburg Central, Marshalltown, Maboneng, and you will not believe just how big an investment opportunity. There are some big names, some government officials, some clients that have been like the former president of South Africa, I won't name which one, that have owned multiple units in Hillbrow, multiple units in Berea. Why? Because they make a killing when it comes to the rental income that it makes. In 7 years, I've done over 700 sales in the area. That's almost an average of 100 sales a year since I've been working that area. I think I was, because I've been dealing with the same attorney, and I think I was on about 756 the last time I checked in those areas. That's higher than any agency honestly can ever say they've done. I don't even know, but I don't need to ask all agents. I just think the numbers are phenomenal, and it's purely because of the vast opportunities that lie in that area. So yes, I would say Joburg Central in Johannesburg is a great area, but again, it's a great area for not everyone. For those maybe who have better financial stamina and you can afford a bit more, perhaps you might look in the Midrand Centurion area, perhaps you might look in the Randburg area, because those are also great potential hubs. However, even with my clients that come to me wanting to buy properties in Sandton, wanting to buy fancy properties in Lone Hill, I always say, well, why not buy great properties in Joburg Central? Because now you can spread your risk across multiple properties as opposed to putting all your eggs in one basket. If you have a property in Camps Bay and now you sit for 3 months with no tenants, you've zeroed your income completely. But if you have 10 properties that are cheaper, and not only cheaper, but they're making you a cash flow, making you a profit each and every month, it means even if 3 of those properties sit with no tenants, I can guarantee you your income, your profit margins that you're getting from your combined 7 units is enough to still pay off your bond for all 10 properties, which is why it's important to think like that.
Wow.
Diversify your risk,
Yeah,
diversify your income streams, and it just allows you to ride any storm. So even with COVID, most people, if you find yourself in the affordable housing market, even when COVID happened, we thrived. Hey, I mean, we didn't have any tenants absconding there. We had very few compared to other markets. We still had a lot of sale activity happening. We had people managing to sell for higher than they had bought for, whereas in other markets, people were now having to bring their prices extremely low. In terms of an annual average, I did more property sales during level 5 than I'd ever done in my career, which is vice versa. Your camps bays and the news are saying the
Yeah.
property market has been hard hit. But clearly, the affordable housing market is highly resistant to some of these things. Why? Because people always need a place to stay. And although we can compromise on how much we pay, there comes a certain point where it's either you stay there or you don't stay anywhere at all. So now you're guaranteed, even people that are downsizing and people that just need a place to stay, you'll always appeal to a bigger market. But if you're specializing in the Camps Bay and Sea Point, and now people are losing jobs, and the first thing that they're going to do is say, oh, let me see if I can trade in my car. Let me see if I can move out and find a cheaper flat. And that means you're the first in line to get hard hit if we have any other COVID wave each and every year. So always just think outside the box and try minimize any risk, any potential risk in your near
Yeah.
future.
Yeah, I agree very well with you. And what are the price brackets when it comes to the affordable housing? What is the maximum of a price? Because I mean, maybe someone 800,000 is affordable to them, but for you,
Yeah, true.
for this the market segment that you're in, what do you think is the cut off, price for someone to actually make a good deal out of the property in affordable housing?
So I don't really deal much with properties over 600,000. In
Oh.
fact, in Joburg Central, the general price range is under 500,000.
Mm. Yeah,
Yeah,
at least if it's 600,000, it's a 6,000 rent. You know,
yeah,
yeah. If it's for 400,000, it's roughly about 4,000 rent, and people can still afford that. Yeah,
yeah.
other than you go get a place in Seapoint where you have to pay for one bedroom is 15,000.
Yeah, you pay 50, so it's crazy. It's
It's
crazy.
crazy. It
So
is.
yeah, no, I'd definitely say under 500,000 normally works pretty well. You get your net returns of 11% and over, which is far higher than a number of markets. And you at least know you're definitely covering your costs. See, the worst case scenario when you look at an investment is you need to break even. Whatever your monthly costs are for that property, your income that you're making from that property should pay all of that off. But
Mm.
we've even gone as far as saying for property investment to really be an investment, it should be giving you a monthly income. Like use the bank's money, use that bond to make you a monthly income. If you're making an excess of 1,000 rand from one property, and yet you just used your credit from the bank, and now you've got 10 properties, now you're making an additional 10,000 per month,
Wow.
and knowing the bank is still being serviced on a monthly basis. So
Mm.
it's easier to now grow your portfolio doing that. And the banks also really get a lot of confidence around your financeability when they see what you're doing with the credit that they've given you. If they see you using your credit smartly, trust me, you'll be called by FNB sooner or later to say, hey, listen, there are ways that we could use, we could give you some more credit, or you've got excess equity, or whatever the case may be. But banks really look at how you're using the credit they've given you, and that's a way that you could now even as much as scale up. I mean, I've had people that have gone from 1 to 9 properties in a space of 3 years. They
Wow.
started with 1 at the end of 2019, and they're on property number 9. And today is only June 2021. So that's even less than 3 years. But they've already scaled up to 9 properties in the affordable housing sector. And it's all about, being able to pace your steps and know exactly what works for you and what doesn't, know what the ultimate goal is, have someone help you out by mapping out a strategy and then working towards it.
Wow, thanks. Last words, I think, yeah, let's wrap it up. Last words from your side. I think that was a great.
Um, yeah, so last words would be, again, just to reiterate the fact that always ask as much as you can. Um, there are a lot of benefits around. There are a number of options when you look at how to buy and sell property. And a number of people just always buy property into their names, into their personal capacities, or they buy with a spouse or with a friend. So just be mindful of asking, what the pros and cons of such scenarios are. Because again, if you get everything right, but then get it wrong in terms of who and how you buy it. If you're buying it in your name and a friend, and it's now affecting both your credit profiles and so definitely look into other entities like registering a PTY that you use as your as registering your properties under. It helps. It has so many benefits, tax benefits. It has there's a way that you can sort of get more finance if you do certain things in your personal name and do certain things in your company name, especially if you're working in the affordable housing market where you're making a profit on a monthly basis. So in other words, it's a business that's getting an income but not really paying out much. So now you could use that business and its
Yeah.
financials to refinance and get more.